AIG declaring its first quarterly dividend since 2008 and announcing a $1 billion buyback as profit comes in well ahead of estimates. I'm here with Dan Freed, senior writer for The Street. Dan, do these results, are they really as strong as they seem?
Yeah, I mean, this is really a very pleasant surprise for AIG investors and even better than I think many of the biggest bulls had hoped.
Now, we're hearing all this talk about the plane leasing unit that it's trying to either sell off or spin off. But what is in the best interest of the company? Because they're saying an IPO is also a possibility.
Yeah, I mean, I don't think it matters at this point. It's a good thing that they've got their plan, for an IPO in place, because they were trying to sell to a Chinese consortium that may still go ahead, but if it doesn't, they have an alternative plan. But really, it doesn't matter in some ways, because I think a lot of people were waiting for this sale or spin-off to occur before AIG could start giving back capital, but they're doing it anyway. So they've got the necessary approvals from regulators, and this, ultimately ILFC becomes less of an issue than people thought it had been.
So how can the company really start returning capital to shareholders before it's sold off this business?
Well, they appear to have gotten the necessary regulatory approvals. Everybody's watching AIG very closely, of course. It's going to be what's known as a G-SIFI, which means it will be subject to extra scrutiny from the Federal Reserve, but it owns a little bank. It's been working with the Fed already, sort of in preparation for this. And yeah, I mean, it has the approval, so it can go ahead and do it.
What does this dividend mean to the types of investors that are now able to take part in AIG?
Well, it's a good question. The dividend means that this will open up AIG to a new universe of investors, because there are some investors who are only able to own stocks that pay a dividend, and now AIG pays what will amount to a very small dividend, just less than 1% yield, but it's, I think, widely expected that they'll slowly increase the dividend. People still really, I think, viewing AIG as something that was a catastrophe in 2008, and the company has really turned that around. It's got a new CEO, Bob Benmosche, after going through various different CEOs. Benmosche is taking appropriate risk with the company's investment book, and that ought to position the company pretty well in this environment where I think taking a little bit of risk is okay. We're not in a bubble after all.
So Benmosche has actually called the company fundamentally different and a simpler company than it was 3 years ago. Would you go so far as to say that the fact that AIG nearly collapsed in 2008 is irrelevant compared to today's AIG?
Yes, I would. Totally different company. That doesn't mean that, at some point in the future, AIG won't take on too much risk. But this is just not a time when I think it's appropriate to be looking at highly regulated companies, regulated by the Federal Reserve, getting over their skis. I mean, that was 2007. This is a totally different time. Boards are very cautious. CEOs are very cautious. People are a little bit scared still of AIG, which only creates an opportunity for investors, I would say.
All right, it's a time of opportunity for investors in AIG. That's Dan Freed. I'm Brittany Umar for The Street.